Are your properties really protected? Should you purchase it through an LLC, perhaps an SCorp, perhaps a C-Corp, a partnership, or can you just buy it in your personal name? There are so many different options, but each one only makes sense for very specific situations. And that's what we're going to be talking about today. What business entity should you use for your real estate? Before we jump in, I'm gonna need you to like, comment, and subscribe so I can keep you updated on all things wealth building. Now, let's just get after it. Now, as we think about real estate, the very first thing I start to think about when I'm thinking about my entities, I'm thinking about asset protection and personal liability. That's really the big deal because we have created the acquisition of this real estate so that we can build wealth. So what is going to be the best entity based on asset protection and personal liability? So let's talk about that. Owning real estate in your name personally puts you at complete risk of everything you own being actually subject to any type of lawsuit, any type of legal matter when it's in your personal name. But trust me, I understand that there are times when it has to go in your personal name because maybe you aren't there yet where you've developed enough credit as an entity where you can actually purchase it in your entity's name versus your own name. So if your only option is to purchase it in your name, go ahead and purchase it. Never stop the purchase of real estate because you're concerned about it being in your name. However, what about it being in an LLC, a limited liability company? An LLC, you guys already know, it is super popular when it comes to owning real estate. But why is that? Why is it so popular? Because it's a limited liability company. And you want to limit liability, especially when you are an investor, meaning you're owning real estate, you have tenants coming in and out of your property, your tenants have visitors coming in and out of your property. And when you are in an LLC, it literally shields you against personal liability. That's the whole point of putting it in an LLC. But here's the thing, your LLC can still face a lawsuit. But the key is, are you making sure you have everything going through your LLC properly so you can protect yourself? Because only that's in the LLC, if done right, is going to be at risk, not everything that you own. What about a corporation, an SCorp or a C-Corp? Is that a good idea? In some cases it is. I want to be crystal clear. From a tax perspective, we always try to not put real estate inside of corporations because there's major tax implications if you need to get the real estate out of the corporation. However, for liability purposes though, is it good to be inside of a corporation? Absolutely. Because similar to an LLC, an S-Corp or a C-Corp, that gives you major asset protection. And that's what we're talking about, asset protection. So you're gonna be protected if you're in an S-Corp or a C-Corp. But the thing that I'd like to say when it comes to that is to make sure you understand why you're putting it in an S-Corp, why you're putting it in a C-Corp. There really needs to be a bigger business reason as to why we're doing that. And when you do that, remember that S-Corps and actual LLCs, they are flow-through entities. That means the loss or the profit is gonna flow through to you as an individual. So it's important that you understand that. What about a partnership? Should you go in a partnership with somebody, form a partnership, put your assets in a partnership? My philosophy with that is a partnership is the hardest ship to sail. I would avoid a partnership at all costs because there is no personal liability protection when you are forming a partnership. You just really coming together with somebody saying, let's do business together, 2 people, 3 people, however many you do, but it doesn't really give you any limited liability protection. So I would definitely watch out for the entity. Choose wisely because it can certainly affect you in the event of a lawsuit. Tax treatment. What's the best tax treatment when you're thinking about the entity to put your real estate in? I'm a tax girl at heart. So one of my big considerations always is what is going to be the tax implication. And I'm always thinking, how can I be tax smart? Well, let's think about it for a second. If we own real estate in our personal names, that means that that real estate is going to go on to our personal tax return. The income goes on our personal tax returns. The expenses goes on our personal tax returns. If we sell that real estate at a gain or a loss, and hopefully at a gain, right? Of course, that is gonna go on our personal income tax return. So you have to realize that anything that's in your personal name goes on your personal income tax return. At least the profit and loss, people will be able to see that. But if you are an LLC, if you are an S corporation, only the net number goes on your personal income tax return. If your personal income tax return is going to get looked at by anybody else, whether it's a court in a lawsuit, whether it's for financing of a loan, they're not going to see the address and any other information. They're only going to see the net profit or loss if you're in an LLC or an S corp. Why? Because remember, LLCs and S corps, my friend, they are flow-through entities. What is a flow-through entity? It's an entity where you file a tax return. S corp, you're gonna file the 1120S. A multi-member LLC, you're gonna file a 1065. But at the end of the day, it's going to flow through to your personal income tax return, whatever the loss or the profit is going to be. So just wanna make sure that you understand that. If you are going to put your real estate inside of a corporation, you have to realize that that corporation, a C Corp, there's not going to be any flow through to you whatsoever. Only the corporation is going to get the benefit of that real estate. That's why it's so important to be tax smart whenever you're thinking about your real estate, because you have to remember real estate has great tax benefits. This is something I want you guys to understand. People get into real estate to build wealth, to make money, but it has excellent tax benefits. So it's important that as we're thinking about tax treatment, we really understand the bigger picture, whether it's in our name, an LLC, an S Corp, or a C Corporation. We want to make a tax smart decision. Depreciation and 1031 exchanges. When you are thinking about the type of entity structure, you got to take into consideration whether you are going to ever sell that piece of real estate, and the actual tax treatment. Depreciation is a big deal. So let's talk about depreciation first. When you purchase real estate, here's the thing. The government gives us a write-off for the purchase of the real estate. They don't let us take the write-off all at one time. So if I go out there and I purchase a piece of real estate for $300,000, $400,000, I'm not getting to write off $300,000 or $400,000 all at once. Absolutely not. However, what does our government allow? They allow us to write it off over time, over 27 and a half years, over 39 years if it's commercial property. So you get to take what we call depreciation, the purchase price divided by the number of years, 27 and a half or 39 years. That can be a big write-off, especially if you accelerate that depreciation using some other strategies, cost segregation, things of that nature. So when you're thinking about your entity, and you need to take your income down, having that actual property in your personal name in an LLC or an S Corp that flows through to you is going to be a big deal, because that flow through is going to offset other income that's on your return. If it's inside of a C Corporation, only the C Corporation is going to get the benefit of the depreciation and not you as the individual, just the business and the business income. So you got to really think about that when you're thinking about real estate and what entity. Now, 1031 exchanges. When you are growing wealth, and that's what you're doing, you're an investor, you're thinking about, you know what, I got to start amassing wealth. I'm going to start with one piece of real estate, maybe two. But how you level up is you use a strategy called a 1031 exchange, code section 1031. What it really says is, allow me to sell this piece of property for a gain. Let's say I have a $200,000 gain. Instead of me reporting that gain in the year of sale, I can defer it as long as I purchase another piece of property for equal or greater value, subject to some other tax conditions, which we can absolutely meet. But here's the key. When you are doing a 1031 exchange, if you own property in your individual name, you got to make sure that the next piece of property that you level up to buy is also in your individual name. I can't purchase property in the name of Carla Dennis and then do a 1031 exchange and exchange it to 123 LLC. If it's in my name, the 1031 has to be in my name. Therefore, if it's an LLC, the 1031 has to go into the LLC. If it's an SCorp, the 1031 has to go to the SCorp. So it's so important to really understand strategically what you're really trying to do in the long run so you can really get great benefits. You guys are super smart and you're amassing wealth, but really understanding some basic fundamentals, how depreciation works, how it impacts your W-2 income, how you can use it to mitigate tax, increase wealth, to understand 1031 exchanges. How does that work? How does that allow me to level up? And getting that understanding before you start moving your properties into various entities is really important. Estate planning. Now, when you're thinking about wealth, the next thing you're going to start thinking about, how do I transition my wealth to my heirs? You're not just doing this just because you're doing it for yourself. Absolutely not. If you're going to build wealth, here's the thing. You want to not only start building wealth, you want to have generational wealth. That's what it's called. You want to be able to pass it down to your heirs. Therefore, estate planning comes into play. And that could be a new term for you, but I want you to level up and get educated. Estate planning starts to talk about, how am I planning for my estate? My estate comes about when all of a sudden I pass away, I have a sudden demise. Now my estate comes into play. If you have property in your individual name, your estate has to go to probate. If you have property in the name of an LLC or an SCorp or a C corporation, depending on who's on it with you, that property will pass to the other members that are inside of that entity. That is why it's so important, as we are starting to get more educated, as we are deciding what's the best entity. I don't want you to just think about today, because maybe today you're 25, you're 30, you're 35, you're 40. Anything can happen to any of us at any given time. I want you to think strategic, think long term. So as you're thinking about the type of entity you want for your real estate, for your wealth building, you're going to think about asset protection. You're going to think about liability protection. You're going to think about tax treatment. What does that need to look like today or tomorrow? You're going to think about the benefits of owning real estate, depreciation, 1031 exchanging. You're going to also think about estate planning. Why? Because you are now smarter. And here's the thing. When you know better, my friends, you absolutely have to do better. You don't get away with not knowing, because I'm educating you. That is why I want you to like, comment, and subscribe so I can continue to keep you updated on all things tax, business, and wealth building.